Okay, so this is a recording of a trade that I took on earlier this week, and we can see that the Euro US dollar, this is the 1 minute chart here, had moved up to a high around 117.70, and it started to come back down here. Now at this point here it was oversold. However, it went up to its moving averages. It didn't really get bought, and the price started to fall a bit lower here. So at this point, I executed 3 trades to the downside. I sold it right where you see this line, and my target was this line here, the 117.50 handle. So I closed out one position here, and I've left 2 positions to run on, and I have put a stop in front of these here. So if the market does come up and takes these out, at least I would have made a small profit. Now I took these trades on the basis of my color coded indicators. So we have the price action moving in a downward direction. We have the red moving average of 17 over the blue. We can see that the price is moving down. We have the stochastics moving in a downward direction. As I say, oversold. The market didn't get bought. We have red over blue. We have the MACD. The histogram is moving in a downward direction. Most of the price action is underneath the zero axis here, but we also have the red line over the blue. These moving averages are moving in a downward direction. And then on our US dollar index, we can see that the actual US dollar index price, as denoted by this black line, is moving in an upward direction, and we have the red over the blue. So I've got all 3 lined up very nicely there, including the price. And then if we have a look at what was going on simultaneously on the 5-minute charts, just here, again we can see that the price peaked here with the Bollinger Bands moving in a downward direction here. Price comes under the moving averages around about this area here. This is where I took on the trade on the 1-minute chart. So we have these lines coming together here, so I'm assuming that the red line is going to be over the blue. We have the red line over the blue on the stochastics moving in a downward direction. We have divergence on the MACD. So for example, we can see that the histogram is moving upwards here. However, price peaks here, but the histogram has not kept up with price. We have a descending pattern here. Again, we have the red over the blue, and at this point we do have the US dollar index moving in an upward direction. So that was another reason why I took on that particular trade. I'm now going to look at this on a 15-minute chart. So this is the 15-minute chart. We can see that the price action has arched across here. It's failed, and then we have the 15-minute candles moving in a downward direction. The stochastic is overbought. These are particularly lagging indicators around about on these longer time frames, but we can see that the trend, the price action, is moving in a downward direction on the 15-minute chart. Let's have a look at the 30-minute chart. Pretty similar. Again, we have divergence on the MACD. So the histogram is moving in a downward direction while price is moving in an upward direction, and that usually tells us that the market is running out of steam. Not much to say on the US dollar index down here, although we can see that the actual USD is moving in an upward direction. That's exactly what we want to see. Price comes down. So let's have a look at the 1 hour chart. The 1 hour chart. So we can see that the price was consolidating around about the 117.25 handle initially before it jumped up early in the morning and it peaked just beneath that 117.75 handle. Price action is outside the Bollinger Bands. The market was overbought on the stochastic. There is some divergence on the MACD. Price again moving in an upward direction. MACD histogram moving in a downward direction. So we don't quite have our mirroring effects on the moving averages, but I'm happy that the 1 hour candle is coming inside the Bollinger Bands, and again that's another reason why I stuck with this particular trade. So we now have our price action moving well down below the 50, so I can move the stops now back to the 50 level. So 117.50. If the price reverses, that will get stopped out on those particular trades. Now, interestingly, you can, when the market falls above your your price in terms of you're actually making a profit, you can actually set the stop loss in front of your price on the MT4, which is pretty cool. So that is that particular trade I wanted to show you, and as the market moves down, I will bring the stops down in accordance with that particular trade. If possible, I would like to see it come down to around about here, 117.05. Normally, you see the market looking to test these particular levels, but they won't do that straight away. They'll come out, the bankers will start bailing out just before, taking their profits, and if we find that the price action stalls around 5 to 10 pips above that critical line there, then what we'll find is that there may be a continuation. But at the moment, I'm quite happy to leave that trade where it is.